All right, welcome to Coffee with Marcus and Mark, the number one stock market show on Spotify and one of the most popular market updates on YouTube. So, in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And today is Wednesday, March 1st. February is over, and February was a tough month for all the major indices. And we also see that the 10-year Treasury note hits its highest level since November. Then we also have Lowe's and Kohl's reporting earnings, and we have a few economic reports. So, what can we expect today? What can we expect from March? And more importantly, how exactly are we trading these markets? So, that's what we're going to talk about today. And if this is your first time here, I'm Markus Heitkoetter. This super smart guy over there is my head coach, Markus. And we are real traders who trade live accounts. So, therefore, we got a lot of trading experience, and we're showing you how we trade these crazy markets. So, trust me, we know our stuff and we're not afraid to tell you like it is. So, if you're here and looking for some honest insights into the fascinating world of trading, you are in the right place. Now, with that said, February's over. So, new start into March?
Yes. A new start. And Marcus, typically, historically, at least according to the Stock Traders Almanac, March is a pretty good month for the markets. The S&P on average has gained 0.9% in March, making it the fifth best month of the year.
Yeah, but it's also often that towards the end of March, we have a little bit of a slide. So, I think what we can expect in the first 2 or 3 weeks that if everything goes according to the Stock Traders Almanac, right, history repeats itself, we might see a push higher and then maybe a little dip towards the end of the month.
It could be. It could be. Just historically, it's been a good one.
Yeah.
Now, February, on the other hand, regardless of what has happened historically, not a good month last month for us, or
Yeah.
for the markets. That is.
Yeah, for us, it was pretty good months, but
Yeah.
for the markets, definitely down. And yeah, everything is right now, the focus is back on interest rates. And now we are looking here at the 10-year yield that is right now knocking on the door of 4% again, a level that we haven't seen since November.
Yep. So that's putting a little pressure on the markets. Markets mixed today, but a rough month for the overall markets in February. The Dow leading the way lower, down 4.2% in February. The S&P down 2.6% in February. And the NASDAQ actually not doing too bad, although it was down 1.1% for the month.
Yeah. And right now, we have talked about it over the last few days. There is the battle around the 50-day moving average. At first, it was holding as support, then it is acting as resistance. Right now, we are definitely yesterday closed below the 50-day moving average, lower today as well. Although in overnight trading, it looked like we were doing good. I mean, if you look at the E-mini S&P in overnight trading in the 5-minute chart, then we see that at first we were moving higher and it almost looked like we were opening 0.5% higher, but then a slide right into the open, and then we'll talk about what happened here.
Yeah, and some volatility. It seemed to have picked up before the comments, but there were some comments from a Fed member that I don't think the market took too well.
Yeah, I think it was Kashkari who had some
Yep.
comments this morning, right?
Yeah, so he said that he's open to the possibility of a 50 basis point hike, but he hasn't made his mind up yet.
Yeah, but this just shows that a little bit the front is actually softening here because most Fed members at the last meeting, this is what we saw from the meeting minutes, were really saying, okay, we should slow down and assess and see what's happening. And this is why everybody thought, okay, we see a couple of more of 0.25% hikes. But now, if you look at the Fed funds futures and the probabilities that traders are factoring in, right now, a 30% probability of half percentage hike. That is the highest that we have seen ever. I mean, for this meeting,
Yep, it's creeping up. It's creeping up for sure.
right? So now the probabilities, if you look at this, I mean, now it seems that we are that interest rates might actually move past 5.5%. And this looked completely different a few weeks ago when the narrative was like, okay, inflation is getting under control. So right now, even higher than everybody expected. So this, I think, the first time that we are seeing this, that now traders are factoring in a probability that we move past 5.5%.
Yeah, I haven't seen that, and for the longest time, we were actually seeing that we get up to maybe 5.25, 5.50, and then we start dropping in November and December. But in this case, that decline, at least based on the probabilities in November and December, puts us at the highs that we've been seeing the whole time. So interesting to see that shift, and based on the data, I think it's warranted. Now we just have to see what happens the next couple of weeks leading up to the meeting. But yeah, based on the strong jobs and inflation being persistent,
Yeah.
that's it's valid.
Yeah, and this morning we had the ISM manufacturing PMI coming out, still showing contraction, just show that manufacturing is slowing down. But, and here is kind of the bad news again, ISM manufacturing prices jumped higher than expected.
Yeah, so double-edged sword, good news and bad news. Not good news is bad news, bad news is good news. But here you have something that's slightly positive for slowing, but then that inflation is persisting.
Yeah, so let's see how the markets are reacting to this. If you're looking at a 5-minute chart of the E-mini S&P, then we see that we opened lower, and this was after Kashkari comments, and then moved higher, then lower again, pushing a little bit higher, now lower. So we are down in the S&P 500, 0.4% for the day, the Nasdaq 0.5% for the day. Dow hanging in there, just around the unchanged mark, down 0.1%. And so we just still see that we have some uncertainty in the markets. If you look at the 5-minute chart over the last few days, we just see there's no real direction, no really conviction. So this here, Monday, Tuesday, and today, Wednesday, just diddling along and trying to make sense of what's happening and what will the Fed do and interest rates. And that's where we just see that, interest rates climbing higher and higher here in the treasuries. And this is just putting a damper on the stock market.
Absolutely.
Well, then we also still have earnings season. We have retailers reporting earnings. And this morning we had both Lowe's and Kohl's reporting earnings. And Lowe's, even though reporting better than expected earnings here, giving a softer outlook. And this is why right now Lowe's down, 5.5% for the day?
Yeah, it was interesting because we actually saw Lowe's open up rather flat, right? So earnings came out pre-market. The earnings were worse than expected or slightly worse than expected. Revenue better than expected. So yeah, that was a positive. Actually, I think it was the opposite. Earnings topped forecast, but revenue was lower than
Yeah.
expected. Then you said the outlook, but nonetheless, interesting to see more of the move and reaction during the trading session. Many times you see that reaction when pre-market, when the earnings release takes place
Yeah.
or after the bell.
And then we also had Kohl's reporting earnings. And here, different picture because at first you see that Kohl's opened way lower. So Kohl's was down almost 8% in overnight trading and then quickly bounced back here right now with the overall market also pulling a little bit lower. But here, yeah, completely different story. I said most of the moves usually happen in the overnight session here when there's an earnings reaction.
And I mean, this just crazy because yeah, that's a huge drop. And even if there is a bit of a gap fill, which I think can happen very often, when you have an overreaction, you normally don't get it filled in one day when you're down 8%. So they actually reported a surprise loss for the fourth quarter. So this was a surprise and why Cole's opened down 8%, I think it was. They also, the CEO said that the company was pressured by the ongoing inflationary environment. So inflation not helping them.
Yeah. And so this is interesting because the whole move here from the low to the high is at 11% move. I mean, right now it looks pretty harmless because they're down like 1.7%, but that was an 11% swing and might have given some traders a heart attack here.
Sure, that's a crazy move. You don't see that every day.
Yeah. Let's start looking at our positions here and where we stand. And so, first of all, let's zoom out a little bit. Bringing up CTRA, this is where we got assigned at 26. We sold the CTRA calls at the 26 level, expiring in 2 days this Friday. Right now, CTRA slightly higher, bucking the overall trend in the market, up 0.34%. I'll take it. I mean, this is where we could see if maybe tomorrow on Friday we could roll our calls, if this would make sense, if the move higher continues.
Yeah, I like that we're holding up above 25. We haven't quite gotten back up to 26. It's been a while, but as long as we could sell calls, we're just bringing down our break even. And it's sitting in a good place, in my opinion.
Yeah, and my break even is at 24.51. Your break even is at 23 something because you sold calls more often, more aggressively, while I was holding out, hoping here for a continuation of the trend. But I think we're both in a really good position here. If we would close this trade right now, we would definitely make money on this trade.
Yep.
All right, Google, the Googles. Super, super interesting here because yesterday Google had a higher move. Now, I got assigned at 108. You're already out of this trade because you got assigned at a lower price. I sold the 86 put last week to fly a rescue mission here, and I was able to close it yesterday at 90% of my max profit. So now I'm looking to potentially sell the 86 again. And I know that on Friday, when I sold it, you were also looking at potentially jumping back into Google by selling the 86 puts.
I was, and I think that this is a decent level. And with the range that we've had in Google, it seems like traders are looking to be buyers at these lower levels. So I think it's a good candidate. Now, to be honest, Marcus, this was also before I added a few other positions, right? So I had a lot of space in my portfolio. This is a higher correlated position to my AMD trade. So right now, with some of the positions I've added this week, I'm less interested in Google, but I think it's still a good candidate.
Yeah. All right, talking about the correlation here. So right now, I have three open positions here in this account: Google, CTRA, and then did we do that yesterday? The Oxy position, or
Yeah,
was that on Monday? Yesterday, right?
I,
Yeah,
I believe it was yesterday. I think
it's a blur.
it was an
Okay.
earnings
Anyhow,
reaction.
so, Oxy, yeah, this is where in earnings reaction, we saw a possibility here of selling puts in an overreaction, what we believe was an overreaction here to earnings. I sold the 58, you sold the 57, and it's looking pretty good. I mean, at first, yesterday, Oxy was falling, but then today bouncing back. I mean, for the day, up 1.5%, also bucking the trend here in the overall market.
Yeah, it's holding up nicely, and I mean, this is one that just pops up on our PowerX wheel scanner from time to time. And I'm liking these levels, 57, 58, 55 to 58. You kind of have this nice support. It seems like the Warren Buffett investment's really holding up this stock nicely.
It seems so. And right now, I mean, if there's something that you would be interested in, the 58 level is still available, expiring on Friday. If you're more interested in the 57 level, that is available, but only expiring next week. If you're looking for at least 30% annualized, and that's what we are looking for at least 30% annualized return here when we are selling puts.
Not too bad.
Yeah. So this is pretty much what's going on there. And right now, it's let's just go back here to the S&P and see what's happening here on a 5-minute chart. Okay, moving lower, so now down 0.7% approximately. The Nasdaq up down 0.9%. VIX slightly up again, but if you look at the VIX, the fear gauge here, we see that it is still at pretty low levels. Not as low as it was in January when we had this nice up move here, but we're still just above the 20 level.
It's right around average, right around average. Hey, Marcus,
Yes.
there's one other company I think we need to look at, and that's NVAX.
Oh yeah, Novavax. Jeez. I
And
mean
I think that
Novavax.
this is a buyer beware story because when this was really going crazy, and we say that especially with the wheel strategy, we don't like to trade crazy stocks. We don't like to trade biotechs. And I mean, this one during the pandemic went from $3 all the way up to $300. Now it's trading at $6.85, down 25% because they have a major concern over whether or not the company can continue to operate.
Yeah,
So they've
and
issued a going concern.
right, and this is why we use flags here, where we say, okay, do we want to take the stock? Yes, no, maybe. And then we also have a never flag. And as you can see, Novavax, one of the biotech companies, we don't like to trade biotech companies. This is why it has been for us flagged. And I mean, there might have been some really excellent premium in the puts,
Sure.
but be super, super, super careful with this. Yeah. So today,
And
massively down.
yeah, and that's why I wanted to bring it up because sometimes you hear about a trader who's traded the wheel and there's a trade, or they're so focused on collecting premium, option premium, which is what we want to do. But there's a difference between a very nice conservative calculated premium and good quality stocks. Why we like that 30% line in the sand so we can get some nice premium, but why we're not trading these 200, 300% ROI options, where there's just this fat premium because the chance of a slide and the chance of something imploding is significantly higher. And this is just one of those that we've stayed away from for a reason, and now it's proving why.
Yeah. So, I mean, we have our own criteria of how we find the stocks that we want to trade. And we actually did a video on this. I'll link to the video right here. So take a look at the video. If you found today's episode helpful, click on like, subscribe to the channel, and then we'll see you again tomorrow.
Happy trading, everybody.